right?
We're going to have to wrap up in just a minute, but I do want to talk to you a little bit about the social media enabled phenomenon that is happening about it, and it's impacted your fund, and it's impacted the interest in all of this, Diamond Hands and the like.
Mm-hmm.
What do you make of that? And also, how do you think about your own responsibility in the context of one of the things you do, which is so interesting, is you are transparent in terms of what you're doing every single day. People see what you're doing. There's also people that are therefore trading off of what you're doing, and how you think about that.
I'll start with the later one. Was the first one about meme stocks, or was it?
Yeah, it wasn't really a question, but it was in the context of just thinking about what's happening here.
Uh-huh.
And all of the whole sort of new generation that seems to be talking about these stocks. Some saying things that are factual, some saying things that are not factual, some saying that they want to have less regulation so that they can do more. It's a very different world than it was post-financial crisis, where everybody said that the job of the financial industry was to protect, if you will, the little guy, the little investor. And now I think the little guy is saying, don't protect me. And in fact, by protecting me, you're not protecting me at all, because what you're really doing is protecting the big guy.
I think it was on your show this morning, wasn't it, that Robinhood's legal counsel said something like that? It's really insulting to these people that you are going to protect them. Right. Okay. That was pretty interesting. So I'll first talk about the trading around what we do. I have been managing money since 1990. So for 31 years. And I've always had other investors or speculators shooting against us, because guess what? Even when I was managing separately managed accounts for wirehouses, I would be posting models. That word would get out there, what we were doing. When we posted our models out there, it would get out, and lo and behold, these stocks would take off. So I've been managing with that in mind for years and years. And so we don't have to buy a stock. If someone wants to take it up 20% the day after we buy and we haven't finished our buy, I'll finish it another time, because I know disruptive innovation is inherently controversial and we'll get another shot. In terms of what's going on now, I mean, I so admire the millennial generation. Yeah, as you say, I'm sure there are people trading just because their friends are trading. But the hunger for knowledge that they have, and the gratitude to us for the kind of research that we put out, the depth of our research, our tweets, our analysts are all tweeting. We have to be, we're on the right side of regulation. We know what we're doing there. We have someone from the SEC who became our CCO. So their hunger for information and their gratitude, it has been extremely humbling in a way. We get a lot of people coming up to us and thanking us for that, because we've opened their eyes to a new world. Let me give you a bit of a difference. When my children were in high school or and college, I was trying to teach them about the stock market. I was trying to get their interest. Nada. It's almost like crypto had to happen. That got them interested. And to the extent they were looking at our research around crypto and others, they're educating themselves, and they love education. It's one of our mission and values. So, we meant to do that, not because we knew this was going to happen, but because we want parents and grandparents and the children themselves to understand how rapidly the world is about to change, and to get your children, grandchildren, yourselves on the right side of change, whether it's investing or your education or your career.
Okay, a couple quickies. Do you own any NFTs?
I do not, but I gave one as a birthday present to Sig Sigalis, Chief Investment Officer at Jennison Associates. He turned 88, and he thinks it's the best present he's ever gotten. Angie Dalton, I don't know if you know her, from Sigmund Capital Growth, and I did. We split it. And his grandchildren now get to do layers of art on top of his digital art.
Do you think there's a bubble in NFTs?
Well, when I saw this original $69 million piece, I thought, okay, this has gone too far, too fast. We're now talking about the creative world. And when I heard about Async Art, I don't know if you've heard of that company. Async Art has developed a digital ecosystem where artists can put out their digital art, and then anyone can buy pixels,
Right.
and change it. And so you can do layers, and the original artist gets paid. I was walking when I heard the CEO tell his story, and my smile went ear to ear because I said, this is going to be so explosive. This is how I felt when the internet first came about. Like, oh man, this could be really big. Remember when everybody said, what's the internet? You know, I had the same feeling here because, you know, creators, you know, they don't get paid for,
Right.
you know, every iteration. So
Robinhood, you own a stake. You also
we do. It's a 1% position. Yeah.
What do you think long term?
Again, we're into the millennial generation.
Payment for order flow.
Payment for order flow. I'd be shocked if it goes away. I agree with the general counsel because it has been so good for zero commission trading and so forth. And you can look at the spreads and you can analyze exactly who's taking what or how big the pie is.
Right.
And I honestly don't think I'm glad it's a discussion because it keeps coming up. Let's get some regulators making the final decision.
We're out of time.
Oh.
CATHIE Wood, everybody. Thank you.
Andrew Sorkin.
Thank you. Thank you so much. Appreciate it.